Hey, it's Rick and Michael from Heirloom Wealth Management on our quick hits. On today, we're talking about stocks or equities. So when you hear us talk about stocks and equities, what the heck are we talking about? This might be a recap for some, but for others, too embarrassed to ask, no worries. Mike, when we talk about stocks and equities, what are we really talking about?
Yeah, so we did another video on bonds. If you haven't seen it, check it out. Kind of described what that is. It's what we would describe as a loaning investment. Stocks fall into the category of owning investments. And so when you own a stock, the easiest way to think about it is part of ownership of a business. So ultimately what happens is you've got someone that starts a company, grows it. Typically it will go public through what's called an IPO or an initial public offering. And what that does is allows the owner of the company or the owners of the company to sell shares to the public at large. So an easy way to think about it is one person owns 100% of the company. I'll just use round numbers to make it easy. It's worth $100 million. They'll go to the public and say, if you would like to have part ownership in this company, we will sell you shares. They could do shares of any increment that they decide, but each share represents part ownership of a business. And I think, especially today, with the ability to trade stocks at no cost and get updates in what those shares are worth, throughout the day, it's easy to lose sight that this is truly a part ownership of a business. That's the way we think about it. My favorite person that describes this would be Warren Buffett. When he looks at a business, that's the way he describes it. He's not buying shares of stock, he's buying shares of a business. And I think that that's an important perspective to have when you're a long-term investor the way that we are. And, it can be interesting because markets can move a lot. Shares of business in publicly traded markets can be incredibly, wide as far as the prices that you'll see. I was looking at one of the top holdings in our client portfolios today. Alphabet is the parent umbrella company of Google, you're probably familiar with. And shares of Alphabet have traded within a 60% range from where they are today over the last 12 months. And so, a lot's going on in the marketplace. You have different investors, fear and greed, emotions are coming into play. But the underlying fundamentals of the business, if you're extrapolating those out into the future, the way we try to look at them, that's how we identify, okay, this is a business that we like. We could take part ownership through equity by buying stock shares. The advantage of owning stock in a business is that you participate as owner as the business grows. Free cash flow. They can pay that to you through dividends. It can, in dividends, a cash payment to you as an owner. Those can increase over time if the business grows their cash flows over time, typically at a rate above inflation if it's a really good business, which makes it an attractive investment. Cash flows can also be returned through stock repurchases. So the company that has excess cash, they can buy back shares that are publicly traded in the marketplace as owner. We like that because then, through no additional action on our own, we own a larger percentage of the business as a result of that. So, I'm trying to think of anything else.
Yeah, there's different ways to access stocks too. We tend to buy individual stocks, and then for some of the smaller level stocks, we can do a whole other video on what the heck we mean by large cap, small cap, mid cap, all that. But we tend to invest in individual stocks, which for you makes it cheaper. It's no cost to trade. There's no expense ratio, which will be another video. So we typically recreate an index for you based on profitability and balance sheet, which we have another video on as well. But you can get stocks individually. You can get fractional shares of stocks, which we already have a video out on. You can buy ETFs, which a lot of people buy.
ETF stands for exchange traded fund.
Yeah, exchange traded funds and mutual funds, which we'll talk about as well. But there's a million different ways to buy stock. When you think about stock and bond, to my point, it's loaning for a bond and it's owning for the stock. That doesn't need to be more complicated than that. Hey guys, if you like that, click here or here to see other videos that we've recorded, and we'll see you soon.